Hello, everybody. Welcome back to Crypto Talks. My name is Phil. That's Rob. Fuck, that's Rob. And we're back with TA Monday again because obviously it's Monday. And yeah, we're gonna check out let's see, Bitcoin and some dominance stuff. Hope's got some stuff prepared for y'all. Some stuff. Yes. Remember, if you have any questions, anything you want to say, any comments, there's a comment section. Spam the heck out of it. That makes us happy. Yeah, let's get into this right away. So I'm going to open up the Bitcoin charts as per usual. And last week, we had basically, we predicted one of two things, which is pretty obvious. It's either going to go up or down. But, right. So we did see, let's see, which day was it? That's the Monday. We were sitting here, I think during the live, we were dropping pretty hard, if I remember correctly. This big red candle.
Yeah, it was, we're bouncing just below 40k, weren't we?
I think so. Yeah, if anyone remembers, correct us if we're wrong here. So either way, we had this big red candle during the live show, and we said, if we break through this second trend line, which is this long term right here, which is anchored all the way back from last year, or even actually it's more than 2 years. It's anchored all the way back in, or more than 1 year. It's back in August of 2022, and then over here in April 2023, which is almost a year ago now. If you think about it, it's a couple of months left. And so we said if we break that and we stay under it for at least a couple of days, we would be considering a 32k Bitcoin potentially, right? Which would bring us all the way back down here to this fib level and this support level right here. However, if we stayed above it, or if we stayed above 38, which is where I think we said we might see it. That was our actual prediction. We said 38 somewhere, where we might see some support.
Is it 37.4? I think was
37.4, something like that. Yeah. I put this green support line here at 38 dead, because the fib level that we have, which is the 236, is sitting right here below that, and we got some volume there as well. If you remember when we were trying to get through this trend line the first time here, a couple of months ago in November, we were trying to fight that to get through. And finally we did, and then we had this big bump. So that's why we see some support there, and that's probably where we saw some strength here from the buyers. So a lot of people were seeing the same thing. And meanwhile, I think during that week, if I remember correctly, on the Tuesday or something, the Bitcoin, the GBTC ETF stopped selling off the FTX shares, which meant that a lot of the sell pressure coming from FTX selling off their GBTC shares were basically not there anymore. And so we saw some strength with buyers coming back in with more buying pressure than selling pressure, obviously. And so we had this big, quick move. I'll actually zoom in real quick here. Whoa, there we go. So this move right here, I'm going to frame it real quick. Here we go. That big move right there, this is the hourly charts. That happened within 24 hours. So we had a failure of the trend line right there, fell hard down, came right back up again almost instantly, and Bitcoin bounced, and everything else followed. Now, we're in a pretty heavy uptrend here, and we're kind of ignoring this old trend line. As you can see, we're kind of just coming up and down through it on the hourly. And on the daily, we seem to have failed it 3 times. For 3 days in a row, and now finally today it looks like we're breaking out of it and actually staying above it if we close right around this price at 43k or something like that. And so our prediction was pretty good, I would say. We missed it by a couple of $100, but whatever, right? But still, it looks like we're getting kind of crappy looking V shape right here, or U shape almost on the daily. But this right here, this little 4-day long kind of peak right here seems to be giving us a little bit of resistance short term, but I really don't think that's going to be a problem, to be honest. I mean, one of the reasons is the RSI has turned up pretty hard. It's way past the moving average on the RSI already, and it's pointing upwards. We haven't broken the downtrend line on the RSI though, but I don't really put much emphasis on that. I don't really feel like that makes a lot of sense to put much power behind, but still, that's there, and we haven't broken it yet. Something else that I want to point out here is that the MACD right here has, well, it's going to flip green today when this daily candle closes, if it closes green. Still a couple hours left. 5 hours left of this day, so we'll see what happens. But if when the MACD, if we start a new uptrend and the MACD, every time we do the flip here, we do get at least some type of continued uptrend for a while, even if it's just for a couple of days, like we had it right here. We got this big peak there, but the MACD is giving me at least some strength behind a continued move up here for a little bit, especially now that the RSI seems to be closing above 50 as well, which puts us into the bullish territory of the RSI again as well. And so, yeah, place your bets, I guess. Just do your own do your own TA first. Just don't listen to me. I'm not always right. And I really don't want you to listen to just me or to just Rob. Listen to yourself. This stuff is fairly simple to do if you just put some effort into it. And we do have, videos where we teach you how to do this stuff coming out as well. We're updating that as we go along here. But yeah, Rob, do you have anything to add to this? I kind of just went on a rant.
I guess in terms of Bitcoin, there's one thing that I can add. It's something that I thought to mention last week. And if you maybe just put my chart on for a sec. Then, okay, so I'm just going to put the MACD on. Remember, I showed you this a couple of days ago.
I remember,
and
yes.
Yeah, so people often talk about, okay, the things are looking bearish, the MACD's bearish, this is in a downtrend, we do it ourselves. If you're going to look at technicals, this is what to look at. But the thing to remember is that the overall macro trend of the market can trump any sort of short-term technicals, even when it comes to, say, the daily. And the MACD is a perfect example of an indicator which has its uses, but it can sometimes be kind of crappy. And a great example that I used was saying that let's just take negative MACD crosses and let's use them as a buy indicator over this year. So let's literally take a sell indicator and use it as a buy. And if we do that, then you actually look at it over the course of the year, and many of these buys actually aren't bad. Some of them are downright good, especially if you think, okay, I'm not going to buy the absolute cross. I'm being really negative here and just buying the absolute worst case. But even so, when you actually look at it over the course of a year, if you got panicked by every single red cross on an indicator that said it was bearish, then actually you'd have missed out on a perfectly suitable DCA that would have, if you just bought every month, you probably wouldn't perform much better than this. And this is literally a counter indicator. This is the complete opposite of what the indicators should be. So you kind of have to put these things in context sometimes and consider the fact that when prices moving sideways, indicators they'll just sort of move around. When you have big moves up, here where we had this big move up, yes, Bitcoin exploded, then the indicator came all the way down and reset and went negative. But should you have sold any of that point? Absolutely not. It was still in an uptrend, but the indicator still cooled because compared to the really aggressive move that came before it, it wasn't doing it. It has to reset back to neutral. So we've seen a fairly decisive move down, and now we're seeing a cross up. And so just sort of be careful, because as it's coming up to, you can see exactly where the price is right now. It's sort of around this midline, but ultimately we've been in an uptrend for over a year, and so the bullish crosses mean more than the bearish crosses, because if you look at the bullish crosses and go, okay, yeah, you're never going to be perfect. You're going to buy some fake outs, but you also would have bought all of these pumps if you'd have bought the positive cross on the indicator. So it's you have to sort of tailor your analysis of what you're looking at to the market. And when I know we mentioned 32k last week. I didn't. I said I didn't really have much faith in it. I think unless the broader market turns around and rolls over, I didn't think 32 was likely. I thought it was, there was a chance of it. However, I thought more likely, we would find support and we would bounce back up, because we are in a bull market and this was a fairly hefty drop on what was basically news. And GBTC sold off. There wasn't, as I mentioned, there wasn't any particular reason for GBTC to sell off. I don't know what sellers of GBTC gained by selling off, other than booking some profit on one Bitcoin.
I think it was mainly the FTX holdings, because they needed. I haven't. I'll be honest, I haven't dug into it that much, but
And so that in that case, great. It was some sell pressure that had to hit the market eventually. It hit at an opportune moment. We dropped some price, and so what? And now we're heading back up. And if this is a continuation of the bull market, then if we have a look at what is remove drawings, if you look at what the typical drops have been, I know we've showed this enough times.
Oh yeah, we did it last week as well.
So 22%, 19%,
and then 21.
20-ish, and then saying here we are, and we did 20.
Yeah.
Do we need to drop? Yeah. Do we need to drop much more? It's almost as if people are buying when it drops 20%, and who buys things when it drops 20% or when it drops a certain defined percentage? Institutions, people who want to buy. So as much as there was clearly a lot of FOMO and a lot of buying into the hype of the ETF that drove prices high, there's also been a very, very irrational fear on the other side. And fear works both ways. A lot of people got scared of missing out, and now they got scared of the price was going to go down. And both groups kind of look like idiots if you bought or sold either extreme of the price.
I did take some notes this time, because I hate to interrupt you in the middle of your stuff. So I wanted to bring something up here. So first of all, you were talking about how the MACD is something you can't really trust. And this is one of the big reasons why we keep telling everybody who we talk to that you can't just use one indicator, right? The whole point here is when you analyze something is you use as many indicators as you know how to read and how to analyze and put them into your overall, daily thesis or whatever, weekly analyzation, whatever thing. I need to stop. I need to stop trying to speak English and just say everything in Swedish instead, and then it will be fine.
Analysis.
Analysis. Okay. Thank you, sir. So, looking at just the MACD here, you can see how it's been extremely on the bullish side here for quite some time, and things always need to cool off. And you can see how even when we get these bearish kind of moves down, it's still moving up in price sometimes. And the MACD it's much more short term, because it's more of an oscillator between like almost a momentum type thing compared to the RSI, which is it reads on a much longer time frame. And so, even if this now is saying, oh, we're going to go up a little bit here, it can still move down, like further down, like right here. You can see how far down we are with the lines here. I'm simplifying this, by the way, because I know a lot of new people are watching this, and it's just easier to explain it like this. And so you should never look at just one. If you just use the RSI and say, oh, I think this is going to happen now, and then things go south and you don't know why, it's probably because you have just looked at one indicator or trusted only one. So the more indicators are saying the same thing, the better it's going to be for you. Okay. And secondly, Rob was showing us just now how we have 20% drops right here, right here, and right here, and right here. And that just got me thinking. There is a reason to why we put the 20% drop as a default on one of our indicators, which is our dollar cost averaging strategy, which is right here. And I'm gonna hide that and see if it pops up, but apparently it doesn't. There it is. So, and for some reason now, why is it showing?
Is that 30? I think it's
I
set at
thought
30. That's more than 20%. That's why. I think.
That's weird. Why is the default?
Set the blue. The blue isn't set to.
It is set to 20% actually.
Okay.
That's weird.
You've broken it.
I've broken it. My bad. Maybe this is the old code, but either way, it's going to give you 20% drops on this blue line, and then it's going to give you, and it's from candle close. That's why. It measures candle close. That's why. So maybe we should take that into account and change that to 15.
Maybe.
Cool. We figured something new out. But either way, this is the whole point of this, is to get you in once Bitcoin drops 20%, because that's usually what it does. You can see right here, where it almost touched it. And again, it's because of the candle close. We'll change that. We'll make a note of that. And this is why this is so much better than a regular DCA, right? So let's see. We have a question, by the way. Here we go. Tokibuza says, so what should we expect to see, in your opinion, over the next 5-day range? Is there any news that might affect the markets? Well, I can give you my rundown on the hourly here, what I think might happen in the next, like in the coming, like the rest of the week. And, looking at this, if we pull a fib level, this is what I like to do. I like to pull a fib level from the top to a bottom. That's not a fib level. Yeah, I know what I'm doing, guys. I promise.
Sure,
there we go. Sure. As you can see, this has played this fib level fairly well. Like we can see how, before you start saying, oh, it's going to do this and that, you have to check back in time and see if the price action has followed the fib levels at least fairly well on the way down. That's what I usually do as well, at least. So we have a very good range right here where it's followed it pretty much to the T. And then we have the same here where it's bounced on it, fallen through, exploded up through. So for me, that says, oh, and this right here says, yeah, okay, we can probably trust this fib level. It's probably sound. And so right now, just looking at the fib levels, we have some resistance right here, which lines up with this top right here, which it's two things saying the same thing just from looking at that. The hourly RSI is almost overbought, but that doesn't mean much. I mean, if we look at the 4-hourly, yeah, pretty much the same. But the daily, again, has ways to move still right here. So can definitely still continue.
Had the
up.
comment, it's covering the RSI.
Oh, it is. You're right. My bad. But yes, just trust my word. The RSI is pretty much oversold on the 1-hourly and the 4-hourly, but on the daily, it still has ways to go.
Yeah.
And yeah, we're obviously in a new uptrend here. If we just make a really quick trend line right here, kind of didn't go all the way, but still, that's intact so far.
We may touch it later.
Touch it later for sure.
Yeah.
For sure. But yeah, right now we're in an uptrend. I don't really see anything in the next couple of days where it would take us down past this trend line just yet. However, I do want to check this peak to that bottom and see where we end up with the next one right here. So it's kind of bounced on it here. This is probably something that someone has pulled from here to here. And the next target would be 44, pretty much dead on. And there's nothing else there except for some, here's the old range, basically.
Well, yeah, that's it. That it does line up pretty well with that range top. Yeah. So there you go. There's a price target.
Yeah,
it's 44 to 44-ish.
Well, 44.4-ish. Between 40,
yeah.
Well, yeah, somewhere around there. And, maybe that's where we need to fall down again and touch this trend line again. But for now, yeah, we're still in an uptrend. I don't really see a reason to why we would fall and break this trend line in the next couple of days. But I could still be wrong. This is just my opinion. I don't know if Rob agrees here, but you can definitely tell me I'm being dumb here. But
no, I think that what we've started to see is a lot of very janky price action where we get a move and then we get held, and then we move and then we get held.
Yeah.
And I kind of expect that to continue. So if we just look at what's happened, every time that we have a big drop, there's generally a quite clear suppression of volatility. And even at the big drop below 40k, yes, that was a lot more volatile, but it was boxed in for a significant period of time. So I'm kind of expecting that behavior to carry on, where there'll be some sort of choppy moves up and down, but overall sideways, maybe possibly a retest back down to 42. But I'm just not really. It's not that exciting right now. As much as it's volatile, but I think it's just sort of done a little wander up and down the top and bottom of the range and gone back into the middle of it. So as it stands, great, not much more. If it carries on pumping, then cool. Are we going to see new relative highs? Hopefully so. But if I wouldn't mind a bit of a drop and a retest just to confirm that actually we do, there is support down at 40k, and we're comfortable that this is a level we don't want to come back and see anytime soon.
Yeah, and we can actually just quickly reiterate what we were saying throughout the year, basically, during this uptrend right here. Whoops. We were kind of talking about how we would end up here eventually on this peak right here, which is exactly what happened. And on the weekly, it looks extremely sideways right here, right? And the weekly RSI and the weekly indicators and everything, that's much more long-term than where we usually look at and what most people usually think about when they're thinking Bitcoin price. They don't really look much on the weekly. But the big moves and the big support levels usually end up showing up on the weekly. And so, I mean, if we do eventually break this 49k that we now established is a resistance from these two peaks, once we break that, I mean, it's basically clear skies. I mean, there's a little bit of stuff happening around 52, but there's basically clear skies all the way back up to all-time highs here after that. And so, and this is also one of the reasons to why we were talking about seeing a correction before we get all the way up to all-time highs. I'm still a little bit wary because I feel like there needs to be a bigger correction, but it doesn't have to happen. It's just that gut feeling that you should basically never trust it. But it just feels like we need some type of bigger move down. But things have changed.
Can we just flip to my chart for a second?
Yes, we can. There we go. You had some dominant stuff too, so do that after this, I guess.
I do. Let's just get an older chart up. Coinbase will do. So, as we said last week, now with the ETF launched, Bitcoin basically becomes a shitcoin again. It's now a small asset class in an institutional world who can buy it and move it with a lot more money than anybody in crypto, anybody who has any amount of tether can move. So we're kind of, in my view, sort of back in time again. And 2016 has proved as a very sort of good guideline so far as to how this bull market's played out, in that it's, we've done a very sort of similar pattern in topping, moving down, having a pretty rounded bottom with a couple of extreme moves in the middle, and now we're starting to edge our way back up. And I think just there's a lot to be said that this looks eerily similar coming into the halving, which was here July. So we're now 3 months or so before the halving. The halving will be about where is it? About here?
April somewhere, yeah.
Yeah. So yeah, there is room for a significant move up, but at the same time, in terms of where we reached, the market structure is it's quite strange how similar it is looking, in that there is quite clear sort of parallels to the sort of market that we are following, and
Yep.
Bitcoin's just doing Bitcoin things, and it's you can even extend to here if you
really want to,
if you really want to, and it's pretty clear what Bitcoin does.
Yeah,
and
it's
maybe
a middle
Yeah.
landing on the way,
maybe this ends up looking something more like this, but we can see there's historically that there isn't that much time between a halving and a new all-time high. It tends to not. Whereas the other one, it was May. It was about
May, yeah, right there, I think.
About there, yeah. So you tend to have a period of months rather than years to get your orders in. So yeah, I don't see much different happening. I think this year is going to probably be, or hopefully be, a bit like last year, where we just sort of take our way stepping up. The problem is, as people anticipate that stepping up, they front run the step. If everybody expects a 20% drop, suddenly you get an 18% drop, then you get a 17% drop, and so because of that, people stop selling altogether, so they want higher highs, and so that's where the aggressive move up comes. That provides the liquidity for the 20, 30, 40% drops. So yeah, history says it's really time to, the train is leaving the station. There's obviously no guarantee that history will repeat itself, but overall, the trajectory is fairly clear.
Yeah, and we have to use the data that we have. Like, if you don't use what you have in history, there's nothing you can anchor your analysis to, right? So you have to look at history, and you can't, like I said, completely trust just that. But the more things you look at, and I have something with the MBRV score that I can show as well here, after you're done with your thing here.
Yeah.
But that will just add more security to the analysis and say, okay, there's so many things now that are showing the same type of behavior that you can put at least some trust in, and that you might be right? So
yeah.
Okay, yeah, go ahead.
So then this begs the question: okay, if we see Bitcoin's leaving the station, however, on the back of that, do we think Bitcoin's the fastest train leaving the station? We know that typically it's not. We know it's a steady gainer. We know it's going to, we know it's the guarantee, it's the safe bet that you should have exposure to if you want to be in this market, because ultimately everything else you invest in could go to zero. Bitcoin is the only thing that we actually look at and go, okay, this really cannot go to zero. There's no fundamental method that can send it down. And so you should have exposure to it, but that doesn't mean that it should be the only thing that you buy if you want to play the market. And so you have to consider dominance and how the market is moving and how the market is allocating capital. And so I've put together this chart. So in white, you have Bitcoin dominance. In orange, we have Ethereum dominance. And in blue, we have basically the others, the rest of it. So it's total. This is the total three, which is total market cap minus Bitcoin minus Ethereum. And then I've also subtracted Tether and USDC as well. So we're just looking at the volatile stuff. Yeah, because taking the stable coins, adding them in, it just suppresses the volatility on that chart quite a bit. And really, what we're seeing so far is that, let's get rid of this. Oh, I don't want to get rid of that. This is really old. Yeah, I don't want to get rid of that. I'll keep it on. But yeah, we see this uptrend of Bitcoin dominance has been going on. We talked about it many times all the way through 2023, and it's starting to show some signs of fading. And I did hope that we would get up here towards 58% at that point. That was my okay, yeah, buy all the alts. But the fact that we've done sort of this very janky distribution pattern almost, and if we sort of start to head down, well then expect altcoins to keep rising against Bitcoin, and it may well be that Bitcoin is, as how high can you expect Bitcoin to get to? Is your best bet? Is it 250,000, 500,000, 1 million? What's the percentage gain on that? Okay, if it hit 1 million this cycle, which is the absolute best, that's a 20x. There are a lot of altcoins that are still yet to do more than 20x in this cycle, and that have barely, most altcoins have barely gotten started. And the easiest way to see that is looking at the others' dominance. You can see it was heading downwards, but it's now starting to put in a series of higher highs and higher lows. And so, there's clear speculation in the altcoin market starting to take hold, and this is how cycles build. They don't just explode onto the scene. You have to have the large carriers of liquidity, which is Bitcoin, which is ETH, which has been, as you can see, just sort of fairly disappointing. It's not gone. Listen, it hasn't collapsed in dominance, but it's not showing signs of strength right now. But the fact that it's holding is still a positive sign. There are still significant interest in holding ETH long term, and it's 17% of the market. It is a huge crypto in its own right, and so those two big assets are what bring the money in. You can't have crypto without the money that Bitcoin brings to the table. And we see over a period of time that people start to take more and more risks, and they allocate their capital from Bitcoin into riskier assets. And they all tend to do that right at the worst time, which is when all of the altcoins have already moved, and the market then punishes those late longers essentially by consolidating back into Bitcoin. And we've seen that exact move in this really horrible zigzaggy move where you've seen Bitcoin just take steps up and leave altcoins trailing behind. And it's only when Bitcoin stops moving that alts decide to move. And so I think that this is something that should continue, and that Bitcoin dominance is rising at the moment. And if the Bitcoin price continues to rise, expect alts to lose out versus Bitcoin. And just be patient, and consider that buying altcoins is really, it's 90% about timing. You can buy the best altcoin in the world, but it can still drop 80 or 90% before it decides to turn around and do 2,000%. And it's great. 2,000% is brilliant. But if you're already 90% down, then congratulations, you doubled your money. So
pretty much.
And so with altcoins, even good altcoins, even the best, the one that springs to mind is obviously Solana. Solana's had a really wicked correction against Bitcoin, dropping from the peak. That's a 32% drop against Bitcoin. And so you've got, if your primary purpose of altcoins is to accumulate Bitcoin, then do bear in mind that you have to at some point sell those altcoins for Bitcoin, and you have to realize profits. And when things start getting silly, and of course it's very difficult to tell when things are getting silly, but there are some clear signs where you go, I should really de-risk right now. And Bitcoin is risky enough, not necessarily over a long term. It's fine. You can say there's no wrong time to buy Bitcoin, but timing is everything, and you can buy Bitcoin before it drops 50% and then stays there for a year. And that's what risk means, is that it can tie up your capital at a bad moment. So every single altcoin is an order of magnitude or more riskier than Bitcoin. And the market is saying right now that we don't really, we're not speculating on altcoins in any big way. The market is showing, we're getting there. It's clearly coming in the sense you can see because of this blue, this blue channel moving up. But this is a janky. This isn't a clear channel. This isn't
Yeah, it's a
this isn't
very wonky one. Yeah.
this isn't the best TA I've ever done. This is a this is an overall sign of a trend, and yes, it's moving up. It can reverse, and if Bitcoin decides to move, and I think we're probably going to have one very, very big altcoin wipeout, and that will be when Bitcoin breaks its all-time high, and that would be, well, you can just applying history to it. If I clear, get rid of you and get rid of you. If I just have a look at when Bitcoin's dominance really has gone and skyrocketed, if I just compare it to BTC, so you can see where dominance took a rise right here. Oh, what was Bitcoin doing?
Yeah, exponential.
You're having its exponential. Bitcoin dominance taking a rise. Oh, what was Bitcoin doing?
Mm-hmm.
Having an exponential. Even the big rise in Bitcoin, the altcoin cycle. If you actually look at where the altcoin cycle was in 2017, like all of this overall, Bitcoin gained dominance. I remember being in, Bitcoin dominance peaked in at 70% when it made its all-time high. The altcoin cycle ended in what, the 13th of January. You had 3 weeks to buy altcoins in 2017. There was there wasn't that much altcoin bull market. If you missed the boat on a lot of alts, you got wrecked almost immediately. And it's so we should be wary that the same sort of thing is happening again, and that right now Bitcoin dominance is heading up and Bitcoin price is heading up. And until we start to see a proper reversal of that Bitcoin dominance, then we want to see it coming down here. That's a long way. This is a lot of, this is not the market that we're in right now. And if Bitcoin's going to keep chartering up, it's going to suck liquidity from the market.
Yep.
What's that? So you're saying the correlation is about the dominance. I say, to me, dominance is everything. Dominance tells you what to be in and when. And if that can go against me if you say, okay, don't be in altcoins, and then you look at the likes of Solana, Injective, choice altcoins are going to outperform through a cycle. Yep. And so that is being a savvy investor. That there's no way around that.
And I mean, it's one of those things that we always, well, not always, but we tend to talk about. You need to find alpha, right? You find the best in the field, for example, Solana or ETH, or the really good altcoins. They will likely outperform most other stuff, except for maybe you bought Bonk when it was new and it just went completely off the charts for a couple of weeks and then gone, right? I don't know if Bonk is gone yet, but you see what I'm saying? It's like just because it makes a huge pump doesn't mean that it's a good coin that will continue on building momentum up and up and up over the years, right? Well,
Binance didn't do Bonk any favors. That's for sure.
What's that? I don't even
Bonk.
see. Oh yeah.
There you go.
Yeah. So exactly here, you see, you can get one of those. Like if you got into Bonk after that peak, you're essentially down. And so this is what I mean. Like when you get these weird altcoins, like for me, there's three categories. It's Bitcoin, then there's altcoins, and altcoins for me are the good ones: Solana, Ethereum, Injective, Render, whatever. And then there's shitcoins, which is everything else, like 19,000 other coins, right? So finding those really good ones where there's like, as an investor, not just a trader or a speculator, but still, a short-term speculator. If you're thinking longer term, if you think long term and you try to buy shitcoins, good luck. That's just my opinion, obviously.
So if you look at when it launched to the peak, it was about 700, just over 700%. Mm-hmm. Now, let's be actually realistic about what most traders or what most people would do. Most people didn't know about Bonk when it launched. I know I didn't. And so they look at it and then they see it and then they're going up and they see it going up. and then they probably buy some in about here,
Yeah.
and then they'll drop it, and then they'll probably sell a little bit at a stop loss because they've now bought too much and they didn't want to hold it, and that's when it then giga pumps. How many people do you reckon sold up here? Promise you, not many of it. Bear in mind, these are only hourly candles. This was a day.
Yeah.
So very few people sold up there. So immediately it comes back down, and they go, "Oh, no worries, because it's dropped. It's had these drops. What was that? That was 30%. Okay, yeah, that's had a really big drop. Oh, 50%. Now I'm going to buy the dip." So what they've done is they've not sold any yet, and they start buying here. And of course, obviously, they miss the dips. They end up buying probably here and about here.
This is pure speculation, by the way.
No. Yeah, but this is how people trade. This is how noobs trade. This is how the reality of, oh my god, look at these massive gains I'm going to make. This is how people actually trade.
Precisely.
Because so they've done that. They've made these two buys, and great, their average price is about here. And then it drops. And now what do? Because now you're in a loss on something which your initial buy, yeah, you were hundreds of percent up. But because you missed that one day where you could actually sell, and then you waited to see if it was going to carry on, and then you realized it wasn't going to carry on, by that time, it's already lost, like you can see here, 50, 60, 70%. And by the time you realize to sell, it's probably about here, probably about the price it's at now. So there's no point in selling at that point because, yeah, it's already dropped, and it's now dropped basically at 73%. And that's now the number that I like to say, from between 70 and 80%. That's the time you start buying in. So most people who invested in this are now heavily down on their money. I promise you, most people are heavily down on their money. And those that aren't didn't make anywhere near as much as they thought they would. Hopefully that, and this is why I will champion taking partial profits on the way up. It doesn't matter if it carries on going up. It really doesn't matter if you miss the top, or if you don't even intend to sell the top. Lock in profits, get to the point where this coin owes you nothing. Make sure that it's pure profit, and at the moment it's pure profit, then that's, if you lose it all, then great, you learnt a lesson. But at least you didn't lose your money. At least you didn't lose what you initially put in. You lost potential money, but if you don't click that sell button, it's not real. It is not real until you realize it.
Yep, precisely. And something that a lot of people do as well, that I do, but I only invest in things that I really believe in long term. So it works better for me to do this. So what a lot of people do is they get in, and then if it starts going down, they're going to buy dips, to lower that cost basis and keep buying it. If they believe in it long term, that's great. Then you're lowering your cost basis. That's something a lot of people do for Bitcoin, something I do. But for something like a shitcoin that has no actual use case, etc., buying that is just putting more money into something that I don't really see why people believe in as a long-term investment. You see people getting into Doge and Shiba and Bonk and all these things, and sometimes they get these massive pumps up and then it falls down again, just like here. And that happens a couple of times here and there on these shitcoins. And yeah, if you can catch that and sell that, great. But you've created a very long-term investment where you're lowering your cost basis, so hoping that will happen. And yeah,
I can actually show some of this, because I can put the coin. I can show the coins that I have on my bot strategy, and I have literally everything. So one of my policies is, just with a small amount, is every single new coin that is being launched on Binance and KuCoin, I am trading. I'm just making it available for my strategy to trade, because I know within that there's going to be an awful lot of stuff that just does stupid pumps. But now my strategy takes a while. It takes 200 candles in order before it even starts buying, and that's on the 4 hourly or 6 hourly. So it takes a while. So I don't care about when these things first launch. But let's just have a look at how things have looked since they launched. And so here's mobile, something that me and you both had a look at and been interested in theory, but token performance so far terrible.
Yep.
AI is this AI flat, which is good. Flat is good, and
That's good.
I'm
Yep.
I'm intrigued in this because it's got a good name.
Yeah.
No, literally, I don't care about anything. If I think that AI is going to have another hype cycle, a coin that has the ticker AI will do well. So there's some alpha for you. Buy coins with names that are good,
God.
like
Yeah.
Doge and Shiba. No, but
Or
no,
pump.
yeah, or is this one called Silly? And silly,
Wow.
you were definitely silly for buying this on launch. Yeah, but then you see this one, Myro. Okay, I've got no idea what it is, but from the launch price, it went up 1,000% on the launch.
Yep.
So here's kind of here's the game, which is, how many people knew the difference between mobile or AI or Silly or Myro or Zua? This one, but I mean, Jesus Christ.
Oh, that's nasty.
I mean, let's have a look at this. 82% down. That's probably time to buy.
Yeah.
So yeah, you see the pattern is in a lot of people that take you take undue risk, and a lot of these things will just come around and bite you in the ass.
Mm-hmm.
Even if they end up, I've no doubt that stuff like this, I don't know what it is, but it's now 1,300% away from its all-time high.
Yeah.
Sounds like a decent bet to me.
I mean, look, so the reality of the situation is one of the big reasons to why you can do this and you take this risk is because you built a strategy that is available through us soon, hopefully, or later. Yeah, soon, TM. And the way that works is it takes small losses and takes big profits, right?
Yeah.
And that's why you're able to play this game with a small amount of money and hopefully make a big chunk eventually. And it's like,
so I limited these coins. This is my casino pot. This makes up something along the lines of about 5 to 7%, I think, of my total portfolio. That's all it would ever allocate to this. And sometimes if those coins aren't doing well and other coins are, it will allocate to them instead. So that's like a maximum. I'm intending for these coins to have one giant giga pump at some point in the unknown future, and I'm just going to sit there and wait for that to arrive. That's all. So
it comes down to strategy and personal preference. How much risk do you want to take? What's your time preference? All these things. So if you're in this game, make sure you know what type of person you are.
And remember, it's a game. Remember, it's a game, and you can lose the game. Do not think that you are an automatic winner because every single person that enters the market thinks that they are going to win. Every single person who enters the casino thinks they're going to win. It is a casino.
If you're not in the top, if you're not in the top 10% of traders, you're probably losing more than you're gaining. And I'm saying traders here. There's a difference. Investor, more long term, bigger chance of winning, but a longer time frame, so you have to wait longer for maybe smaller gains, but it's still safety in time frames. But yeah, we need to kind of start rounding this thing off today. So this was fun. I had fun.
Yeah,
lots of people talking. We got Kavik, we got Toki. I think I saw Dave there as well. Yep, neat. So thanks for coming, guys, and remember, joining the Discord. Joining the Discord is number one. We'll see you there after this. And leaving a like and subscribing if you haven't would be cool. And share this with all your friends and everyone you've ever met. Your grandma, your dog. It's all good. So
yeah,
we'll see you tomorrow. We're doing. Are we doing one tomorrow?
We are.
We are. Yes. Cool. It's a Macro Tuesday tomorrow. We'll see what we get into then. We don't really know yet. We'll have to see. So we'll see you then, and cheerio. Bye.
Bye.